is oil. Crude crushed under 60 bucks a barrel. It's under $59 a barrel, 58.41. A lot of concerns out there about oversupply, simply too much oil in the world, though. But could that be good news for the equity markets? Let's talk about that and more. Joining us now, Mark Newton, Fundstrat's Global Head of Technical Strategy, and as by the tie, you can see a fellow Vatek Hokie. Great to have you on set, Mark. Thank you. We actually overlapped for a couple of years there. Right. Quickly, oil, are you looking at it as a benefit to the equity market or just kind of its own thing?
It's its own thing. It's completely a supply-demand story. OPEC Plus flipped the script. They went from, deficit to surplus, so a huge decline today. Yep. You heard from IEA, though, there's no more peak oil. So they said there's going to be ongoing demand for oil over the next 25 years. So that's a different story for the long run.
The IEA is, I talk about this a lot.
That's right.
They've done a quick turn. We're wrong, but I'll give them credit for kind of admitting they were wrong.
Look, I think in the near term, the next couple months are really going to be negative for crude and for energy. Even though energy has been the top performing sector over the last 1 week, 1 month, and 3 months, beating technology. Now it's going to start to decline, I think, in December. So I think crude gets into the 40s, honestly. And it's going to be negative for crude, I think, in the next couple months.
If we get crude oil in the 40s, we're going to have gasoline in parts of America under $2 a gallon. Yeah, that sounds like a good thing for the consumer and maybe the stock market.
Yeah, it certainly should be a good thing to combat inflation and those that are worried about that. And we need energy for AI and the whole build-out for power generation. So we're going to continue to need to obviously have fossil fuel and investment there in the years to come.
Yeah, demand for oil and gas, whatever people think about it, is going to continue for our lifetimes. Let's talk about, though, pharma. Pharma, listen, it's its own thing, kind of dominated by the GLP-1, the so-called weight loss drugs. What are you seeing technically in the pharma charts?
Look, it is a little bit of a defensive sector, and we've seen really good outperformance in healthcare over the last month. So along with energy, healthcare has also done quite well. My thinking is that pharma continues to do well. It really is starting to look better and better. The longer-term charts, though, are not great on healthcare, but it really is more of a defensive bounce, and I think that continues into month end. Likely into December. We normally have this mean reversion trade that starts in November. Some of the worst performing sectors start to bounce and do well. We're certainly seeing that.
Why is that? Just fund managers trying to find a bargain somewhere?
Yeah, people look at the laggards. They think they should go from being the worst performing sector into the best. And I don't necessarily always buy that, being a technical analyst, of course, as you know. The Hokies can't go from being the worst team to the best. That takes time, right? Look, in general,
if it just happened at all, I don't care how long it takes. Either way, we've needed in Hokie Nation a lot of coffee this year. Coffee prices are at record highs, but now the White House saying they're going to try to cut tariffs on coffee. Why are you looking at coffee as a technician?
Coffee is for closers only. You have to look at coffee, obviously. We've seen coffee show really, really good signs of strength. The entire Bloomberg Commodity Index broke out to the highest level in more than 3 years this week. So coffee is one of those that certainly could benefit, but my thinking is if what they're saying on tariffs is correct, it probably will cause at least some short-term jitters. Coffee's down about 5% today. So Besson's comments did cause that to move down. But technically, there's a number of commodities that are starting to look quite good. Soybeans and many of the grains, for instance.
Is there a way to play, aside from being a soybean trader, by the way, like Scott Bessent used to be, he actually was a soybean farmer.
That's right.
Is there a way that you at Fundstrat are recommending playing any commodity complex? Is there a way to do it?
Yeah, some of the energy, some of the commodity ETFs are a bit thin, so they lack the liquidity. So you have to tread lightly there.
They can have big moves either way very quickly.
That's correct.
And you're often trading against a producer who actually grows or sells the stuff. Unlike the stock market, you're not really trading against Jensen Huang.
Well, the issue for investors is the roll to the futures, and sometimes that can be really problematic by trying to buy these commodity ETFs when they go from the front month to the second month, and so it unfortunately can affect the...
Very quickly, macro market, great stuff, but what is I know you're a chartist, what's the next most important or the most important next thing you're looking at from the charts?
Look, the bottom line is we need to get other sectors to start to participate. It's really only been technology in recent months, so there hasn't been this broadening out that we thought would happen. That could be a problem early part of the next year if that does not happen in December. Tech, as long as it holds us up, the markets can be fine. Right now, there's still a lot of negativity, and so Tom Lee's been absolutely correct on that point. If that comes back in December, then we'll see about next year. My thinking is trends are intact, they're fine. we're sort of lacking the buying. It's people have been
So
on the
what do we want to see?
sidelines all year long.
The Russell 2000 breakout, or what do we need to see?
That did happen briefly.
I did. New highs briefly, one day or whatever.
Yeah, not long. Look, we need to see small caps start to participate. We need to see financials, which have been, under the gun based on a few of these, is this going to be metastasized across the financial sector, all this regional bank worries? My thinking is it's just isolated to a few cases, and financials are going to be just fine. They're actually coming down to levels that make a lot of sense into next year. So I love financials. I like tech, but tech's a bit overdone. You want to look at industrials. If crude gets down to the 40s, it is going to be time to look at energy into 2026. For now, I would put on the brakes and really use some of these gains in energy to try to lighten up on that sector heading into
because I will add on top of that, there's a massive underinvestment in energy. A lot of people want to say, well, oil's at 40, it's here to stay. I've been covering this now 20 years. I will say this, no commodity stays in a current price range for long because low prices beget high prices and vice versa.
IEA's statement is a game changer, and crude's been in a 3-year bear market. I don't think that lasts into next year. So if crude gets down lower, I want to be a buyer in energy in the first half of next year.
Mark Newton, really appreciate it. Fundstrat. Mark,
pleasure.
Great to have you on. Thanks you very much. All right.